Hey, good afternoon, everyone. This is Charles Sniper again with a weekend review of the market and major indices and some stocks. So last week was kind of I mean, early part of the week was good, but then towards the end of the week, it just neutralized whatever move that happened. So let's take a deep dive on what happened last week and what could be up for the next week with this deep dive. Okay, so with that, let's get started by looking at SPY and what happened last week. Okay, so this is without any studies, very decent bounce to two-third of its value, the 61.8 retracement. It tried to pull back, it tried to go over it, and completely rejected. What it means is it is not ready to move higher. Okay, and the kind of gap down here and again gap up and gap down here means that there is a lot of concerns out there. So what happened overall is the inflation numbers came out very strong, and those inflationary numbers and also Fed having some emergency meetings to kind of figure out a way to tackle the situation more aggressively is kind of where market is trying to see some concern going on, and market never likes uncertainty of any form. So because there is uncertainty on what Fed will be doing to kind of will it take some drastic measures to kind of control this inflation, the market is reacting to that uncertainty. So with that in mind, where exactly could we go, right? So that's the question. Technically speaking, this is a double top, okay, and it has retraced back all the way to the target of the double top, so this is fine. But what is more concerning me is this big down move and then a bounce back. So this forms a bear flag. So what it means is, it could never come out into a bullish zone and it start falling back. So it can end up in couple of ways, okay. No one knows which exactly is the way, but looks like the inflation numbers and interest rate hikes might cause some pressure in stocks that are very highly valued to support those stocks at those high prices with the higher interest rates. Okay, so people will not have any free 0% interest rate money flowing around to keep these stocks elevated at those prices. Okay, so there might be some give up, and looking at this double top formation and looking at the way the candles are very big to the downside and also the volume. When we look at it, it's a very high volume sell-off is happening, whereas the bounce is a very limited bounce, right? So if you see, this bounce in 2 days was low, but this pullback bounce is at very high volume. So that means there is a lot of pressure to the downside, and if there when there is a pressure to the downside, a couple of things could happen, right? So out of this all move, it can come back to this 435 level in SPY and try to see, try to form a higher base of it and bounce from there, okay, if it is strong. So why I'm saying that is, this move probably would have included a lot of inflationary adjustments, right? Inflation and interest rate. So this market is forward looking. So whenever this down move happened, probably at that time it did not make sense why the market is falling. But it's looking into the future and then seeing what exactly how many number of interest rate hikes and how much inflation is coming, and adjusted it ahead itself, the price. Okay, so now how much of this down move already takes into consideration how many interest rates is that matter. Is it going to be worse, or is it going to be within this range? So that's what dictates, like looking into the future. This down move, if it considered like three interest rate hikes, say will Fed, if says five interest rate, it will not happen, but five interest rate hikes or something like that, then it would like to move further down and correct the numbers again. Okay, but if Fed sticks to that, probably it might stay within this range because that's already priced in, right? When they actually Fed starts to raise the interest rates, then typically that is forward looking and market already corrected for that. And when that bad news is coming or starts coming, it might rally back also because it acts into future, right? So okay, now Fed will raise four interest rates, and I already corrected for that four interest rates. Now that Fed is actually raising it and still sticking to the same four interest rate hikes, then I'm okay. The numbers are corrected, the price is corrected, then let me slowly do my work. What is usually what the work of it is continue to chug along higher. Okay, that's what typically happens. So no one knows how much of the inflationary or interest rate hikes is already priced into this big down move. So depending on further adjustments required, it could make a higher low. Obviously, this green trend line, uptrend line, was not supported, right? So that doesn't hold any strong as strong support. 435 is the range, and also like added in this week. When we look at long-term perspectives, right? Added for this week the entire move from the entire move from March 2020. Okay, so when we look at that entire move, nothing so destructive happened yet. Market just pulled back to 23% retracement, and now it's still above 38%. It means it did not even retrace one third of its this entire up move. So what it means is, even it could come back all the way to 38.2, which is 380 level, and still be bullish. Okay, still be doing its thing of slowly moving higher. So these levels are quite possible if the market wants to kind of pull back more, and that's the worst case, right? That's the worst case we're talking about. So yeah, I mean, you can't, I mean, the kind of stimulus funds available for this rally to keep going and every dip was being bought are these are not the same things that exist anymore, right? So what happens now is, with no proper monetary policy or support, if it starts moving downward, it can continue moving higher, moving down. Okay, on a weekly candle perspective, this this week's candle is a completely engulfing candle, which means all the bullishness that happened last week is negated. Okay, so we would be probably seeing, a visit back to these lows. As I mentioned, most of the bottoms form this way, where there is a big down move, and then one, two, three, four, fifth week again, it comes closer to that and starts bounce back, right? Same thing, down move, 1, 2, 3 weeks it forms lower. So those kind of W patterns are very common in bottom formation. So if you can see here, 1, 2, 3, 4, 5 weeks. In 5 weeks, it kind of visited that lows, right? So how are we doing here? Okay, so this is the third week after this bottom. So maybe we'll do some kind of consolidation, some more red thing here, and then we might move a little bit lower. And if whatever the interest rates hikes is already priced into the down move, we'll start moving higher from there. If not, we'll revisit these lows, and we probably might go even lower too. And we're looking at long-term perspective, 380 is a support, right? So um, those are the things that are open for the worst case scenario. Okay, so that was without any moving averages laying over. So let's lay over averages. So very clear, right? As I mentioned, 5 weeks average is this gray line that you're seeing is the guide for you. Last week it tried to move higher, but it closed below it. This week also it tried to move higher, it closed below this. So as long as this 5 weeks average, the price is closing below this 5 weeks average, it continues to be downtrend. Okay. Now it is trying to, we have to see 437 is 50 weeks average support. And if it doesn't hold, then we have 430. If it doesn't hold, then we have that previous bottom of 420-ish, and then the 23 points retracement of 418. So 420, 418 looks like probably might be a good support if it wants to hold, right? With this backs that cloud and then bounce backs there, like forming a double bottom. Okay, if check, I don't want it to revisit to 420 levels. Okay, I want it to kind of hover on top of that, probably at around 425-ish, and then bounce back. That gives a signal that there is some strength into the continued upward move. Okay, but if it comes below 420, then I do not see much support in SPY as such, and it might visit that 397 400 levels for sure at a minimum, and then it can go back to that next support at the 385. Okay, and 380 is the long-term 38.2 retracements. Okay, so from here 430, and if you're looking at 380, we are talking about around 10% more correction. Okay, so that's what it looks like, right? Yeah, 40, yeah, for $45 correction. Okay, so be cautious of that. I use 5 weeks average as guidance. We don't need to be bottom pickers, and especially it will be very clear for you um, that there is no direction, right? it it's kind of on a daily basis, moving around, gaining 5x average, 5 days average, losing 5 days average again. So there is so much choppiness, and when there is no such direction, there is no trade. I mean, unless you are selling iron condors. But again, even if you sell iron condors, like range bound between this one and this one, what happens is this kind of candles will breach them very quickly, and you'll be in a big loss, because iron condors, you get to kind of probably 20% of for 20% of profit you are risking 80%, those kind of scenarios, right? So the risk reward is very, very high in iron condors, and especially when these big moves happen in directionally after consolidation, then they will be very painful. So when there are no proper trades, when there's no proper direction, it's better to patiently wait it out and wait for some long-term support levels to be hit. Okay, the long-term support level so far is going to be this cloud top, and if that loses, once it gets into the cloud, it's all noise. Okay, last time it hit that cloud, it tried to stay above the cloud second time, and that's it. It completely breached that entire cloud just on a very big down candle. Okay, so that's very quite possible, right? And yeah, this one, I again, what I will try to give you an example is, I'll try to take an example of 2005 kind of move, 2008 kind of move. Okay, so here it came down, it bounced back and stayed below the averages, right? So what are we looking at here, right? So it came down, it bounced back almost to the 50 days average, 50 days average, which is very similar to what is happening right now, right? It bounced back all the way, and now it started falling back. It lost 200. So if we kind of, if I can duplicate this guy and compare it to what is happening currently now. Sorry about this adjustment. I wanted to convey a message here. Okay, so let's keep it that way. Okay, there you go. So that is 2018, and this is what happening right now. Okay, so it is doing that first pass of So that initial down move happened here, the big down move happened below 200 days average, and now it's bouncing back almost to the 50 days average if you see, and it never kind of tested that, and the 50 days and 100 days are coming closer. So it might pull back like that, it might even pull back like that, okay? And as long as it is staying below that cloud and doing that, so what happened ultimately is, it kind of puked towards the end to visit that very lower lows in 2018, and then it started bouncing from there. So the longer it stays below that 50 days average here, the sideways consolidation, the more probability for that down move happening. So just because this down move happened and the market is trying to bounce there and hold these levels, it doesn't mean, a further big down move can never happen. Okay, so it can certainly happen. This was a clearly a bear flag consolidation, and then that was the actual down move. Okay, so you should be ready for to kind of deploy your money into new investments, not here. Okay, for sure, not below 200 days average, especially when it hits those levels. That's where the long-term support levels. That's where you should be trying to deploy your money. So maybe revisit of this one, and it could bounce one more time and give up finally for the puke. So we never know. Okay, or yeah, I think it's going to be bearish, mildly bearish for next couple of months for sure. So I don't expect it to probably go higher and make a new all-time high in this kind of situation. So be cautious with your directional plays, and if you are trying to play directionally, you'll get upside moves and you'll get downside moves very very generously. Like in every week you'll have two of those things, 1% or 2% moves. So as scalping makes sense, swing trading doesn't make sense. I don't want you to sell to buy here at these levels and sell at the bottoms to see further bounce, right? So be cautious with that. So that's about SPY. Lower lows possible, have some money on the sidelines to deploy it at these levels when it comes to that level, right? Below 200 days average, everything is dark. Okay, let's move to QQQ. I mean, I took some time to explain to you that situation so that we are you understand what exactly is about to come, right? So from QQQ perspective, we are already, if you did the purple lines are the long-term March to highs, right? So we are already looking at, it moved below the 23.6 again. So it looks like it want to revisit the 315 levels, okay? 38.2 retracement. So for SPY it was 380 and now here it is 315. And the way these volumes are looking at and the bounces are very mild, looks like, we probably might, and the kind of Bollinger Band is expanding, so we might see those 318 levels. So it might go and find those levels as support. Okay, let's look at weekly. I think I don't want this RSI there. Okay, good. Um, so either this cloud top holds, but it doesn't look like that way. If you can see how the 5 weeks average is pushing it downward, so we might lose this. We might go to the bottom of the cloud and try to find support at 315. Okay, only thing that you see is here is the bounce that happened, what happened at a very high volume, and this week's volume in QQQ is kind of below those things. So there is a hope there, but we can't count on such kind of hopes, especially when technicals are screaming downward, and the Fed is not helping, and interest rates might have more pressure on the tech stocks, right? So be cautious about it. I would want you to kind of go aggressively in buy mode at these levels than these levels. Okay, so that's about QQQ. We are looking at it did not hold the short-term supports. We are looking at a support at 343, if not 334, 325, and all the way to 315. Okay, so from 345 to 315, we are looking at again 10% more correction. Okay. So 10% moves. Yeah. So with that, let's quickly move to QQQ is weaker than SPY. Let's quickly move to IWM. So it's interesting that it has a green candle for the week, right? When SPY and QQQ has a red candle. But what we are looking at is, this move was very intense for small caps, and probably that there is so oversold that it's trying to kind of stay green or relatively strong when compared to SPY and QQQ, but that doesn't guarantee anything. It's still below 5 weeks average, and if the overall market wants to visit those levels, down, this will be helping that direction too. Okay, but check for some more relative strength in this IWM if it is showing some signs of strength, which means overall market might bounce also. Uh, it's already it previously visited 38.2 retracements long term. Now, if this level doesn't hold when pulling back, we are looking at the 200 weeks average, which is at around 175-ish. Okay, that will be a very strong support from long term perspective. Okay. Um, Dow Jones. So the only ray of hope, I would say, in all these major indices is this one. It's relatively very strong when compared to that. See, it's not an engulfing candle when you compare it with SPY, and overall it's trying to stay above that 50 weeks average. And yeah, so nothing remains exception if the overall market wants to move lower. Okay, it has been trying to hold it, but a clear bear flag formation, and if it resolves lower, this will not hold down. Probably it will respect that 100 days average. Okay, 100 weeks average. Okay, so we have to wait and see. This is the one that is holding nicely, and yeah, I mean, I would like to see if the market starts bouncing back. It is the first one. The stocks in this Dow probably will be stronger, but I do not have that much hopes that market will be bouncing back to all-time highs soon. So with that, it lost 200 days average, and below 200 days, that nothing kind of is bullish. Okay, so that's how it looks overall. The situation was looking a little bit better because of this consolidation that was happening, and we were thinking that it might make those go into the bullish zone, but it did not. It clearly rejected that. So now we have to wait and see what exactly is the consolidation that it will do. Will it make a lower high, sorry, a higher low, or it will continue to go lower? So we have to wait and see. Very difficult times to trade, and you want to be very cautious. Don't make spontaneous decisions, to buy or sell. Okay, wait for that long-term supports. That's my recommendation. And if you have to stop trading for a couple of weeks or 1 month, that's fine too. I don't want you to get big losses in this one. So VIX from it had a spike back to 31, 32 level. So now that it bounced back to that level, let's go and see if we can come up with the pattern. So whenever that big down move happens, if it happens, because of a surprise from interest rate hikes, number of interest rate hikes and stuff. So we'll be looking at, it going back to this uptrend line, like this resistance line on around 40s. Okay, that could be the final thing. Um, Now that it moved back above cloud and above staying above 25 level, I think that's a point of concern. So it was below the 20s and stuff last week. So uh, yeah, here, and it tried to kind of go lower, so which means market tried to kind of get into a bullish zone, but last couple of days it undid that mild bullishness, right? So anyway, we have that level around 40 as maximum value, and if it starts consolidating very strongly, we might be looking at that kind of resistance also. So we have to see once it breaks this level of 29 or 30ish, we'll be looking at that big spike in VIX, which means market might fall. SKEW. This is surprising. Like, it's at 126 level, so this is not showing any signs of a big concern or big move possible. So what it means is, there is not going to be a two standard deviation move or something like that. So which means market might chug along sideways. Okay, so you might not expect a very, very big move, but what it takes, how much time it takes for it to kind of bounce back to these levels after the visiting these lows, probably 1, 2, 3, 4, 5, 6, 7 days, right? So a week, in a week time, it can go from 125 to 140s, high concern, right? For example, here it was at 130s, 1, 2, 3. In 4 days, it was at about 150. So nothing prevents it from going back above that consensus levels of 143. But as of now, it looks like not a big concern is being shown here. Okay, and put call ratio is elevated, but consistently it's not trying to make it's trying to follow that trend line, right? So it's not going back to those previous highs of 1.15. So as long as it stays there, which means sideways consolidation could happen. In other words, what it means is it can do some more dancing around here, okay, or maybe here, a little bit more consolidation, come back here, bounce here, like that, okay, so for another week or so. So we discussed all those things, and let's move to individual stocks. First, let's cover Bitcoin. So there was that bounce along with the market, and now it's kind of staying 2 days of down move, and overall not below the cloud, below the 50 days average, 200 days average, and that 50 and 200 dead cross happened there, which means the bearishness started, right? So we'll be looking at least it going back to that level of 3800 ish, 38,000 ish, and then try to make a decision whether it wants to come here or go lower, right? So similar kind of conditions apply last time. After this kind of bounce here, as you could see, a down move and then a bounce, it went further lower and stayed lower for a long time, right? So similar kind of thing. This, if this bounce is this guy, right? So we might visit to make a newer low here, and that is the yellow trend line from this top. If you take this complete down move, we have not retraced that completely, so it might come back to the 31,000 levels, and then probably um, do some more consolidation there and move higher. Okay, Ethereum, similar kind of setup. If you take this implied move completely, you're looking at further possible moves to 2000 ish. Okay, and it's mainly following the market, also overall market. So yeah, if the market visits those levels, these two also can visit those levels. Okay, so with that, let's go and check our individual stocks. Apple. Apple lost 50 days average and 20 days average. If Apple was staying higher, probably there was a ray of hope. But market bounces, but with Apple giving away, and you can clearly see from 168 to 160, there is not much support. It's in the cloud bottom 165 level. It might find a support there, but no, if not, 160s and are in the horizon. Okay, very, very um, less constructive bearish action there on weekly. So it looks like now that it closed below those things, 160s is where it's going to be, 161, 162 level. So that would be around 6 points down move. So we can play to that. We can play that range. Apple, Amazon. Amazon 50 days average is the guidance, so it pulled back that it could not regain it 50 days average, and then now it is pointing downwards. So Relatively, it's kind of staying a little bit higher when compared to the overall market, but let's see if 3019 holds. If not, it's open for lower lows. I, the reason why I spend so much time in SPY and QQQ is most of these individual stocks which fall into that bucket of tech stocks or something like that, they follow the same pattern. They follow the overall market. You see, in the last 3 days of down move compared to SPY last 2 days of down move. So, yep, I think from the support perspective, when we draw this kind of uptrend line, we might be looking at some support around 2800 level, and maybe some at a weekly level there might be some support there at around 2800. Not much, so you might be looking at that 150 weeks average staying in between, like between 100 and 200. So overall that was a very very negative move. 2900 is where it is going, 2800 probably the downtrend line. 2850-ish would be some kind of support. It might quickly move there. So Google on weekly clear rejection, and 2610 looks like a support. If not, 25,000, 2500 or 2400-ish, the cloud top will be a support there. On a daily, it lost its 200 days average, so all the hope is lost. We'll be looking at 2500-ish, so that will be around $180 uh, move down move. Okay, so yeah, on daily it doesn't look any great, and below 200 it can visit the 2500 levels. Okay, Facebook. So this might hold relatively a little bit stronger because of that big down move. So it might consolidate here for a lot of time, but there is a lot of scope for further down move. And if market overall is going down, some beaten up stocks might be, first thing that gets beaten up again. I was looking at some long-term support. So in Facebook, around 175 is the long-term support. So if it comes to that level, you can buy with both hands around 175. Or if you can sell naked puts, you can sell 175 naked puts, and then if it comes to that level, you get assigned. Okay, but if not, it stays afloat. You can um, get some premium deposited. Okay, go up to 45 days into future. Okay, but overall, yeah, it can easily go back to that 190s level on a weekly basis. Yeah, 200 weeks average, below 200 weeks average, you can't help anything unless it claims back about 232. So you keep shorting, and there's a lot of catch up to do, right, for these averages to come to the price. So it will stay lower for a long, long time. Okay. Yeah, that's for Facebook. So we covered Google, Facebook, Amazon, Tesla. Tesla holding above 50 weeks, but it might not hold above that longer. 796 if it breaches, 745, and if that breaches, 785, 685. So that's at a weekly long-term time frame perspective. On a daily, if it goes below that 824, that's where you'll see 790, 785, and 650-ish. Okay, so nothing is immune if the overall market wants to go lower. So you'll be looking at those kind of breach of 200 days average and continuing further lower, and probably you'll see that down move, very intense down moves, because it's trying to stay strong, but when people realize that it can't stay strong, then that candles will be very big candles, red candles. Okay, so be cautious about that. Overall, it's consolidatory phase on weekly. So 750 might be some support of first bounce, and with 790, 800-ish, 795-ish as a decent support. Yeah. As long as it stays above that, it should be okay. But once it reaches that, we are open to these kind of levels. Okay. Netflix below 200 weeks average. Let's see monthly what exactly it is doing. Yeah, we have some support around 308 ish. So if you are looking for long term, wait until that. For now, looks in no man's land. If you want, you can sell that 300 put or put spreads in Netflix. Daily continuing lower with 325 possible, and if it visits the 325 level, why not go to that long-term cloud support of 308, right? So it will probably do that. So overall, at the conclusion, the market is not looking that great. The economics part of it is not looking that great. Free money will not be available. No stimulus stuff is available to hold back the market. And technically, market tried its best to bounce, and it's clearly rejected. So we probably might be open to lower lows. So that's what it is. So be cautious. Don't play aggressively to the upside. You could probably sell some covered calls or no, but again, do that cautiously also. But overall theme is mild bearish to bearishness. Okay, so that's what it is. If you already stuck in some positions, try to use that 1% or 2% bounce to lighten them out. If it was, if you are ready to hold it for a year or something like that, then all good. Okay, so probably this is going to last for 3 months or something like that. So already we are part of already, we finished almost 1 month from the 1.5 month. So 1.5 month more pain might be there. So that's what you're looking at. So if you have some long-term positions in deep loss, and if you intend to hold it until next 6 months or 1 year, then don't worry too much about it. But look to add a little bit at the long-term supports, not here. Okay. So let's conclude this with on that note, a very caution note. Be very careful with your plays. If you are scalping and day trading, you can play mild bearishness trades, not aggressive bearishness, because market might go down, but before it goes down, you can do a lot of dancing here for a couple of one more week. All right, so you think that it goes down, you go and buy puts, and then it kind of stays around here somewhere, and those puts become least, right? And you can see a big red candle might follow with a big green candle and then red candle, so a lot of choppiness could be there. So yeah, be careful with short-term option trades too. With that, thank you very much for tuning in. This has been a long video, but I think it's important to kind of look at what is possible worst case scenario. Hope it was helpful. And with that, see you in the next weekend review. Thank you very much.